So the core of the stock-to-flow model is that more scarcity leads to more value, and thus the halvings are key. In fact, all the action is around the halvings if you look at the Bitcoin price data. And the trading rule is based on exactly that insight. Buy just before the halving, in fact buy 6 months before the halving, and sell after the halving, in fact buy 6 months before and sell 18 months after the halving. Now let's look at a chart, and then we can see what's actually going on. So the strategy is 4x the Bitcoin price, and we're awaiting the next buy signal, and we know already that the halving will be around April 2024, so 6 months before that is around October, the closing price of October or the opening price of November. Then it enters the market and will stay there for 2 more years until October 2025, 24 months later. And very interesting if this cycle will be like all the past cycles, the 3 past cycles I should say, it's not that many. If we see a jump again, and if the Bitcoin scarcity indeed drives the value, and thus the halvings are very important, and price jumps are.
Well-known on-chain Bitcoin expert Plan B, the mastermind behind the esteemed stock-to-flow Bitcoin valuation model, is confident that he's found a particular strategy or trading rule that outperforms Bitcoin by 4x. The rule is so simple, it's borderline ridiculous whilst at the same time genius. The strategy is called the stock-to-flow trading rule, and it involves 2 steps. The first is to enter the Bitcoin market and buy 6 months before the Bitcoin halving. Historically, 6 months before every halving, Bitcoin has a final dip, so it's been an ideal point in which to enter. Then, hold on to your Bitcoin position until 18 months after the halving, in which you sell everything. This way, you completely avoid any crypto bear markets but still receive the bulk of the gains. If you had followed this strategy up until now, you'd be outperforming Bitcoin by 4x. In this video, Plan B breaks down this trading rule and unpacks if he thinks it will continue to prove successful into the future. Make sure to stick around to the end of the video where Plan B breaks down 2 more charts which suggest that not only are we in an early bull market, but also that it's about to accelerate. Also guys, if you want to stay most up to date on the crypto world, I send out a daily 5-minute crypto newsletter that covers expert predictions, on-chain data breakdowns, and breaking news, all for free. Click the first link in the description, enter your email, and join over 5,000 others to become a better crypto investor right now. Now here's Plan B with his Bitcoin prediction.
Basically, a trading rule is a buy and sell action, a simulation of how a investment would go over time depending on the buy and sell rules that you give it. So how would the hypothetical equity line look like? And remember, stock to flow model is a prediction, and it predicted in this cycle 55k, which we are a little below right now. We're at 31k on average in this cycle, so that's below the 55k, which is okay. I mean, stock to flow is not 100% correct. It can be a little bit below or above. And for next cycle, the stock to flow model expects or predicts 532k. So the core of the stock to flow model is that more scarcity leads to more value, and thus the halvings are key. In fact, all the action is around the halvings if you look at the Bitcoin price data. And the trading rule is based on exactly that insight. Buy just before the halving, in fact buy 6 months before the halving, and sell after the halving, in fact buy 6 months before and sell 18 months after the halving. Now let's look at a chart, and then we can see what's actually going on. So we see on the x-axis not the time but the blocks, which is essentially time, but it gives you the halvings very neatly. So every halving is at 210,000 blocks. So this was the first halving in November 2012. This is the second halving in 2016. I think it was July, and the last halving was in May 2020. On the x-axis On the y-axis, we see the price, the Bitcoin price in dollars. And the blue line, of course, is the Bitcoin price. It's currently at around 30K. And the purple line is the trading rule. It's the equity line that starts at $5, which is around the price of the 6 months before the halving time frame. So, okay, it starts at 6, then 6 months, or at $5, 6 months before the halving, it enters the market, it buys, and then it follows the Bitcoin price. That's what you see here. Then it goes through the halving. Then 18 months after the halving, it sells. And so the value of at around that time, which was around 600, will stay for as long as the strategy stays out of the market. Bitcoin, of course, went into a bear market, which the model avoided. And then 6 months before the 2016 halving, it entered the market again. It bought and then followed the Bitcoin price again, all the way up to 16,000, and Bitcoin price was 10,000 at the time, but of course we were starting at a higher price here, so we were at 16,000, the strategy, and then it sold again, 18 months after the halving, 18 months after this line. And it avoided the complete 2019 bear market. And then 6 months before the 2020 halving, it bought again, it entered the market, followed the blue Bitcoin line, and 18 months after the halving, it sold at 122,000. And that's where it's right now. Bitcoin, of course, at 30,000, so the strategy is 4x the Bitcoin price. And we're awaiting the next buy signal, and we know already that the halving will be around April 2024, so 6 months before that is, around October, the closing price of October or the opening price of November. Then it enters the market and will stay there for 2 more years until October 2025, 24 months later. And, well, very interesting if this cycle will be like all the past cycles, the 3 past cycles, I should say. It's not that many. If we see a jump again, and if the Bitcoin scarcity indeed drives the value, and thus the halvings are very important, and price jumps are around the halving again. So that was the trading rule. Next chart is market stages. A lot of questions about this chart as well. And this is a chart that's not a prediction, it's a detection. So it cannot tell you how long this stage will last, or it can only tell you what stage we are in right now. And currently we are still in an early bull market, the blue, stage 1, early bull market. And we're there since January, so 6 months already. And we don't know when the green starts, but usually it's right after the halving. So here we had the 2020 halving, and after that the late bull market started, the real jump up. Same here, 2016, July was the halving, and then a few months after that the green. Same here, November 2012 was the halving, and then the green started right after it. So we don't know what's going to happen this time around. The halving might be front run. The green could start before the halving, and it could also be delayed because of a black swan event or something, we don't know. But at least we know when we get there, and once we get into the green area, I will of course let you know. One more thing, this market stage model gave me the courage in January 12th to make my market prediction. And if you don't know what it was that the November 15K was the bottom, And I knew because the bull market already started, right? And after that I said, well, the halving will be around 32k at least. So it could be much higher, but at least 32k. And that prediction was made in January, when I knew that we already entered the early bull market, or at least this model indicated that we did that. So the third and last chart is realized price. It's a classic chart by now, but I like it very much. So realized price is the cost price of all the Bitcoins that were bought. The black line is the cost price of all the Bitcoins. The dark blue line is the cost price of all the Bitcoins that transacted last 2 years. So it's kind of a moving average. But the advantage of that is that you do not carry the 1 million Satoshi coins all the way through history, and you just look at the more recent coins. So obviously it's a little higher, the average cost price, than if you include the early coins. But it also has this very stable pattern. And well, the important thing what we see is that the Bitcoin price, the red dots, moved crossed over the 2-year realized cost price. And it already crossed the realized cost price. It already crossed the 5 months, the short-term realized and hot price. So now, and that's a new thing, I haven't even tweeted about it, it crossed the 2-year realized price, and that's an important signal. Of course, the month in history closing above the 2-year realized price was a signal that the bull market accelerated. Same here in 2016. And 2019 was a bit of a weird year with a COVID black swan here. And well, I might have some influence, had some influence here with the stock to flow model that was maybe front run, but we were a bit early. Market was a bit early here. But if we take this and this dots as crossing the 2-year realized, this is also where the bull market started. So it's very interesting. And well, one more thing is also very interesting. The realized price, the black line, and the 2-year realized price, the dark blue line, started to increase again since a long time. I think it declined for about a year, and now for the first month it's increasing again, and that's when things become really interesting. So we'll have to see what the Bitcoin will do. If we cross 32 fast, then I might have to update my January 12th prediction that the halving will be at 32,000 or above, which is of course based on this 2-year realized price. But if we already cross that, and we still have 8 months to go, so then probably we will end up a lot higher. So I will probably do an update at the...
So there's the acclaimed on-chain analyst Plan B unpacking his stock to flow trading rule. His stock to flow trading rule is indeed a game changer, showcasing the perfect blend of simplicity and genius. And those charts at the end, truly mind-blowing, giving us all something to think about in terms of where Bitcoin might be headed. One thing I'd warn against for anyone thinking to replicate the stock to flow trading rule is that history is in no way indicative of what will play out in the future. Just because it's worked in the past doesn't mean it will necessarily continue. Also, if enough people are aware of the strategy, then of course investors are going to try and front run it, which will completely change the dynamics.